Let's move on and let's welcome on board B. Prasanna as well and find out how the macros are shaping up right now. Prasanna, hi, good to have you. Neeti, now let's first talk about the currency because that also has seen just so much volatility given the announcement on tariffs by Trump and then, of course, the fact that he's now gone in for a pause as well. But where do you see the rupee headed next? Would you say that the worst could be behind us, or rather, I should say, dollar strength?
No, unfortunately, I don't think we are still out of the woods, Aisha. I think basically what's happening, of course, you know the entire story about Trump tariffs and all that. But beyond the reversal of yesterday, the fact that there is more and more uncertainty, that's one point which really favors the dollar. People just want to get back into the dollar. And the second is that at some point of time, tariffs are keep coming and going. And what it does is it does put a kind of a the story of the emerging markets are a little bit weaker in this kind of a situation. I think most international investors want to just invest into the U.S. markets, and with U.S. yields also at 4.5, 4.6%, it's quite attractive. So for emerging markets, with the risk premium for it to attract the kind of money, it's going to be very difficult. So from that perspective, while India's CAD looks good, India is still growing at a decent shape, even if not at 8%, at least at 6 to 6.5%. We're not able to attract that kind of money because simply the alternative is that we are competing with the US and not with just rest of the other emerging markets. So in that sense, money is flowing back into the US, and that is one of the reasons why we are seeing depreciation of the INR. And bear in mind that it's the dollar strength, like you rightly pointed out, and the entire set of global currencies are weakening. Last one day, there has been a reversal. But if you really look at the last 2 years, 3 years performance of most of the currencies and compare it with INR, looks like INR has appreciated against all the other currencies, depreciated only against the dollar, which basically means we have depreciated much less against the dollar than the other currencies have depreciated against the dollar. So from that perspective, I think there is some space more to go. I would suspect that these kind of dips in the dollar INR rate as we are seeing today are all will be used as opportunities by the international investors to just buy on dip on as far as the dollar is concerned.
Good morning, Mr. Prasanna. This is Shrishti also joining in on your take that the foreign investors should actually look and buy the dips. We are also hopeful for that. But Mr. Prasanna, help us understand that what role should RBI be playing in terms to stabilize the rupee? Because of late, we have been seeing a lot of intervention coming in from the RBI, and that actually led to the liquidity crunch in the system as well. And also give us your take that how these current policies have been in terms of their effectiveness.
So I think, Srishti, first of all, when I said buy on the dip, I said that on the dollar. So I'm basically saying that the international investors will look at every opportunity to buy the dollar, and they're looking at this as might look at this as a good opportunity to buy. And to answer your question on the policy framework itself, I think, like I said, I think focusing too much on the INR dollar kind of misses the woods for the trees. I would say that. What we need to do is to actually go along with the global flow, because if we don't depreciate enough against the dollar, then the other currencies are depreciating, then we will look more and more, unsustainable. Our RER will appreciate. In fact, before this current move started, our RER had gone all the way up to 108.5, which means we were 8.5% overvalued. So we need to get that back into the 5 to 6% overvalued territory. Two or three things will help us do it. One is, of course, if the nominal currency rate INR depreciates. And the second thing is, of course, if inflation in India itself comes down, which it is likely to come down over the next few months. So I think both of these will need to happen in whatever mix we will need to find out. And as far as RBI's policy prescription is concerned, normally central bank does not cut rates when the currency is weakening. But I think the way I would look at it is that this time it is different because it's not really an India story that is leading to the INR weaken. It is actually an US story, the dollar strength, which is leading it to weaken. And the fact that India's current account deficit is pretty strong. We are still at less than 1% of GDP on a CAD basis. And even if you look at a rolling 12-month basis, we would be possibly 1.2 or 1.3%. And our services and remittances are really doing well. So from that perspective, there is no real fear from a current account deficit perspective. It's only the fact that the capital flows are not coming in. And hence, what India really needs is a growth push. is a policy support from both the government as well as from the Reserve Bank. And hence, from that perspective, if I have to prescribe what they have to do, I would rather say that they should let the rupee depreciate. They should provide more and more liquidity to the market. They have actually started off very aggressively, and but more needs to be done. What they have done is excellent, but I don't think that is enough to the extent of the kind of rupee liquidity that we have lost in the last 2-3 months defending the dollar. And they should also, the third thing is to cut repo rates. So if they do these three things, depreciate the rupee, provide more liquidity, and cut the repo rate, hopefully India's growth will again go back into the 7.5% over a period of time. And we can see foreigners at some point of time when the dollar peaks in the international markets, they will also be coming back into India. So I think that's what we need to be thinking of doing from a policy perspective.
Prasanna, you don't think the budget did enough to actually instill and propel growth?
See, when I think the budget was too much was expected out of the budget in terms of what we were the expectations where they will push consumption, they'll push investment, and they will also do fiscal consolidation. And this I call is and of course do income tax rate cuts as well. So I would call this as the government's version of impossible trinity, which the Reserve Bank keeps facing on other issues. But it's not possible for the government to do it. So I think what the government did is a brilliant thing in terms of for the consumption push, they cut income tax rates. So they're hoping that the lower and the middle income, which gets the maximum impact, will have a higher propensity to consume, and hence they would be mostly consuming the savings, the reduction in income taxes that they would be paying rather than saving. So that's going to push consumption, hopefully. But at the same time, the overall expenditure of the government is not grown too much. So hence, from that perspective, as long as you are consolidating the fisc, you're going from 4.8% of GDP to 4.4% of GDP, it really means that the fiscal impulse is not as high as what we are thinking. So we are just looking at one part of it and saying that this is a good consumption push. Yes, it is, but it is a consumption push for some sectors of the economy. But for there might be some other sectors of the economy which might not, get the benefit as much, plainly because the overall expenditure itself is growing only at 7%. And also bear in mind that the infrastructure spending by the government is also not a bad number when you compare it with the actuals of the current year. So even if you look at 10 to 10.5 lakh crore as the expenditure of the actual side on the capital expenditure, next year would be 11.2. So it's still a decent growth. But the fact of the matter is that you can't do beyond a point, you can't fire on all cylinders. And the government has chosen, maybe rightly, the path of fiscal prudence to a big bang, expenditure budget.
Right, Mr. Prasanna, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us, giving